SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at Bitcoin. We can spin it in a positive light as we've now started to see a rejection on the Dixie exactly as expected. I did tell you this 2 days in a row. Dixie has peaked. This is the everything bounce. Dixie's finished for the year. I said that a couple of days ago. Yesterday I said the Dixie should break down from here before it broke down, and lo and behold, breaking down. Overall, I'd be thinking that this is going to have little pit stops along the way. The 10 exponential is going to be the big one to break down from. I think it's going to do it this time, to be honest with you. I think this is the one. I think we're going to come down to meet the 50 exponential. Again, I've explained this 2 days in a row, and now we're seeing the proof in the pudding, really. So that's no big deal. Like I say, we should have expected that, as I expected it, and made a song and dance about it on YouTube, Twitter, Telegram. I was adamant about it, and anyone who knows me, when I'm doing tap dances around my YouTube videos, it's because I strongly believe in what I'm saying, and this could be a pivotal moment in all markets. This might as well. We could also entertain that we might not actually get a crash if this is the case. Now, we may still get a crash, obviously, because there's lots of buzzards. Rather than black swans now, there's like buzzards and vultures still circling all these charts with geopolitics and recessions and all kinds of madness going on right now. We could still expect a crash, but as far as the charts are concerned, we should be expecting, first of all, before anything now, a bit of a relief rally, another bear market rally, and one that we should expect it, really. We should expect it. S&P finding a nice bounce yesterday. Nasdaq also finding a nice bounce. Now, I was talking yesterday about how, you know, the areas that I was personally playing yesterday didn't involve crypto at all, because I recognise that crypto is pretty weak. It's got a delayed fuse to it, if anything, we could call it that. So, you know, we see traditional markets like major indices, commodities, and Forex all responding very well to that dollar pullback, and that's, again, part of the way that I've managed to expect the pullback on Dixie in the first place. And I refer to Bitcoin as like an afterthought at best on traditional markets as a risk asset, which is unfortunate because it's never used to be this way. I used to love trading crypto specifically because the charts were the purest, and you could take them on face value. But now, you know, we have to look at all these other things in order to get a handle on it. This is why I've been doing Forex charting and even the everything bounce. You know, the everything bounce that we got from crypto and altcoins and Bitcoin was mostly deduced from breaking down the commodity price action. So from commodities peaking and then a rotation going from commodities and energy into equities and indices and stocks. This time around is definitely much more of a Forex thing, and it's been a Forex thing for me for the last 4 to 6 weeks, and that's how we've managed to get a handle on this pullback. Now, you know, as far as Bitcoin's concerned, it's a bit of a measly move, really. I suppose if we zoom in close enough, we can see that it did have a decent bounce, which is fine. I mean, when I saw this happening, I wasn't particularly concerned because I was so adamant that the Dixie was going to break down, or start to break down. So I wasn't particularly concerned that we'd gone down below this box. And so I think the focus really now on Bitcoin is to take its chart on face value. It's not out of the woods. Not at all. What we've got to look at is this descending triangle. We want to break out of this descending triangle. If we do, then fine. There's certain areas that we need to reclaim. Just as I've been saying on these previous videos around here, areas to watch, Bitcoin range break areas, and it's as simple as that. We've got to get ourselves out of this descending triangle, and we've got to get ourselves back inside and preferably above the box. As this box is the box of significance, I like to call it, starting at around 19,450 and ending at 19,750. We've got the 200 exponential. This is all 4-hourly stuff here. 200 exponential sort of towards the bottom area. If we start to close above 19,500, I would say closures on a 4-hourly candle body around that level should start to build a trend at this point now, because we'll be outside of the triangle. Sorry, that I wake up so early these days because of the kids. I can't even remember the English language. So yeah, we break outside of this descending triangle. Also, we get back into the box, and we'd be out on top of hopefully the 200 exponential moving average. So this should be everything we would need to start to see some major upside building. And again, it would be slow to start. I'm not looking for tearing up moves. And sometimes what we'd be looking for would be a move up and a retest of the box or so, and then building up from there. But I'm going to give a little bit more of a bullish bias now to how Bitcoin's going to behave over the remainder of this month into next month. And we could even speculate ever so slightly, just for fun, that maybe the bottom is in. And you know, we did this before, you know, and we'll do it again just for fun. We can make ourselves a measured move if we can get a nice straight line for you there. Let's just assume that we break out of this triangle, you know, today or tomorrow, and our measured move takes us up to 26,500. That's what it would do over time. That'll be the measured move from the mouth of this triangle, and that would be realistic. I would say that would be realistic, you know, to see a move like that before the end of the year. Whether it happens quickly or slowly, no big deal. But what it does to altcoins is a different story. I would say if you can't find an altcoin with a decent setup, don't bother trading it. To be honest with you, focus on Bitcoin, which is going to be the main focus on any kind of move throughout the market. Because if Bitcoin can't break out here, it's going to be very difficult for any altcoin to really fulfill its destiny, regardless of the setup that it seems to have on the chart. So, you know, it's the same old really. We can focus on Bitcoin now with a bit more credibility, given that I believe quite strongly that the Dixie is going to pull back to about between 5 and 7% over a period of weeks to this 200 exponential. So we're measuring it here from where it is already. Again, this is quite a substantial uptrend. So this 50 exponential moving average on the weekly is going to be uptrending for quite a while. I mean, it's going to stay with its positive slope on it until we get beneath it. And I'm not suggesting that we will go beneath it. You know, we've looked at this 2 days in a row now. I've emphasized the fact that, you know, in an uptrend, we mostly go up aggressively and spend time on the 10 exponential, and then when we reach a peak, we come down to the 50. I think that's what we're going to do here. I'm not expecting this to break. If it were to break, then great. I don't think it's going to break on its own. It would require the Federal Reserve to, you know, change their stance on inflation or whatever, or maybe some positive inflation reads. We'll see. I'm not going to get my hopes up for that. I just think that we're going to start to see a bit more of a sustained consolidation at this point now. Over a period of weeks, I'd give it between 2 to 6 weeks before we actually revisit this 50 exponential. So static and down, basically, slow bleed out on the Dixie, unless there's, like I say, unless central banks do something outside of what they're already doing. So I strongly believe that upside is more likely than downside at the moment. I'm not saying that we're not going to get a crash, but we can, you know, just for fun, assume at this point now that upside is more likely than downside, given the overall trading environment that's been presented to us with the Dixie and, or should I say, the dollar. The dollar weakness. Sounds weird to call it that, but it's not exactly weak, is it? But the switcheroo in Dixie. So maybe later on this year, the Dixie finds a support around that 50 exponential and goes back up to the top of the channel. That's very possible, and it's quite likely, to be honest with you. And then, yeah, that's where we see a crash take place from. Again, this is a trading setup. This is a decent setup. This is why I made a song and dance about it, and I'm quite happy to try and play it. But I'm not going to be looking to go hard into crypto until we get outside of this, because we're still in a bearish formation, and we want to get outside of the bearish formation before we go bullish on it. So yesterday, all the trades I was doing, all the trades I was posting, they're all traditional markets. There was Forex, stocks, and commodities. There was nothing else. I wasn't doing crypto yesterday because the repercussions of the move that I anticipated on Dixie was going to be felt more dramatically in the broader trading environment, and crypto is weak. But crypto will stop being weak as far as I'm concerned, and crypto will start to pick up pace if we can only get above this box. Really, it's kind of that simple. Reclaiming 19,750, arguably 20,000, we start to push up towards this 200 exponential and a little bit further beyond, with that measured move to around 26,600. So there really is nothing more to it than that. It is as simple as waiting. Now, this weekend's going to be relatively interesting. Obviously, it's traditional markets and Dixie and currencies, commodities, the lot. They're all closed for the week. They're going to open again on Monday. And so Bitcoin and crypto, it's up to them to decide how next week is going to open. Because I've recognized for the most part of this year, at least, that traditional markets seem to watch crypto, or at least Bitcoin, over the weekend and treat it almost like a pre-market. Because, despite the declining price and the declining volume, because the market cap is so much bigger than it ever used to be, we get huge amounts of volume. Just on Binance here alone, the last 24 hours of Binance, despite the little tiny wiggles of price action, is coming in just short of 5 billion. Never used to be like this if anyone was around, back in even just a few years ago. Really, a day where you'd see a billion 24-hour trading volume would be a big day of big price action. Now it seems to be pretty normal. So there's still a lot of money floating around on a daily basis in Bitcoin alone. Just short of 5 billion. That's a lot. At the end of the last bear market, the entire crypto market cap was sitting at 100 billion. So it's pretty decent stuff, really. So I would go as far as to say is we'll watch crypto, we'll watch Bitcoin throughout the weekend. Don't bother trading it unless, of course, we start to break above 20,000 or so. Things will start to get interesting again. But yeah, treat it like a pre-market. Wherever we go, wherever we close, coming into Monday is likely going to dictate the continuation, whether it's up or down of traditional markets and the Dixie. Again, just because I've got this fix on here and it seems to have worked out perfectly, it doesn't mean it'll have continuation. It doesn't mean that. It means, we've got great entry points on commodities and stocks, and obviously I shorted the dollar right at the absolute peak here, which is an absolute hero's position. But it doesn't, and all of these things, I've still got my gold and silver and yen and all this. I've still got those positions on. Tesla and whatnot, whatever it was that I was showing yesterday. All of those positions are still on because I expect continuation for the Dixie, but it doesn't have to happen. The main problem we've got to focus on is this 10 exponential, which is where we usually bounce from for the most part. This is where we normally bounce from, and we would probably find a little bit of a bounce around here when we get there. Whether we bounce up to the top and break out is a different story. This is why we have to monitor the weekend for crypto, because I guess the pre-market of traditional markets is seen as Bitcoin, really. So, but again, if we were looking to trade in crypto, let's wait and see how we go. If we can break out of this formation and get above 20,000, I honestly think that the next major target should be seen as above 26,000. Right, I'm going to leave with you there. There's nothing much more to say about it. Crypto is still boring, it's still pretty weak, still in a bearish formation, but just as I've said throughout this week, it's a range, and the range breaks are pretty clear to me. If we start to break down below 18,800, bearish, move back down to the bottom of the range, 18,000 flat. If it breaks to outside of this descending triangle and get above the box of significance, then we should have continuation to the tune of that measured move, 26,600. Thanks for watching, guys. Hope you have a nice day. Take it easy.